Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to the Pro Trader Tips for this week. We are in the heart of earnings season right now, actually at the very beginning of it. We have a lot of stocks that are declaring earnings, and a lot of people are afraid to trade around earnings. They may invest and have long-term money and they just hold it through the earnings announcements. But if you're a trader, sometimes you become very sensitive to earnings announcement because anything can happen. You can have blowout numbers and the stock go down. You can have cruddy numbers and the stock go up, and vice versa. I mean, you can have great numbers and the stock goes really up, or really bad numbers and the stock goes down. So with that said, how do you trade this? And there's really two different ways. You look for stocks that either don't move through their earnings announcements. These are going to be stocks that have been companies that have been around for a long time, that are very mature in their business cycles and in their business space, and they just don't move very much through their earnings announcements. Big multinationals that it's really hard to move the needle for these guys. And oftentimes we can find a strategy to take advantage of the non-movement of the stock. And then there are those stocks that are on maybe they're new, or they've been around for a long time, yet they're in the cutting edge of technology. Okay, and they really move through their earnings. Everyone's looking forward to the announcements, and they move big. So last week we talked about stocks that potentially move big, and that was CarMax. This week we're in a related industry. It's transportation, okay, and that's JB Hunt. All right, with crude oil prices and all sorts of different information out there. This has always been a stock that really moves through its earnings. And let's take a look at a deeper dive into the trade we placed through our subscription Delta Neutral breakout. Okay, so that is the service that this trade came out on. This is trade ID 1078. This came out on April 15th. All right, we were in the trade for 1 day, and you'll actually see, you'll look at the dates and think it's 2 days, but it's the way the computer checks. Once it goes through a 24-hour period, then it counts as 1 day. So you could actually be in the trade for 40 hours, and it's going to view it as 1 day. Okay, but we entered this trade on the 15th and exited on the 17th. So either 1 or 2 days, either way you want to look at it. But this is what we call at least a triple. Normally we look for hitting singles and doubles, nice returns on a minimal risk, and every now and then we hit these triples and maybe even a home run once in a while. And this is that borderline triple to home run, depending on how you look at it. Okay, this trade just within 2 days generated a 213% return on capital. All right, now that's a pretty nice return. So let's digest it. Let's get down into it. So on the 15th of April, we issued this trade alert. Now this was a strangle on JB Hunt. We bought the 190 call, sold the 180 put. So a $10 wide strangle. And I model all these trades with option modeling software. And here is the image that went out with that trade alert. You see the stock on the left, and then our trade on the right, how it's modeled. All right. So this risk graph, if you're looking at the black line, each time it makes a change in the angle changes, okay, where there's a corner, that's a strike. So here is up here is the 190 call, down here is the 180 put, and this is when the trade was put on. All right. So we had 1 day to the announcement, just 4 days until expiration on this particular trade, and we were looking for the stock to move. That's what we wanted to happen. So during the course of the trade, we get the earnings announcement, and with this, you'll actually see that I put out a commentary on this. All right, and that in after hours trading, the stock just started to drop like a rock, which is what we were anticipating. We were either anticipating a big pop or a big drop, and this stock, as you can see in the chart here, this stock after hours trading, you get the earnings announcement, you get the earnings call, and as they're doing the earnings call, the news just wasn't good, and this stock literally goes from about 183 and change down to 172 and change. It dropped over $10 just in a blink, okay, just in a matter of minutes. And I commented on this after hours to our readers saying, hey, this is what's happening. Be ready to say maybe take some profits in the morning. So sure enough, on the morning of the 17th, we pull it up, and I posted another print. We were down even lower at 167. Okay, in pre-market trading, this is actually right when the market opened. You can see that first 3-minute candle of the day. That's what you're looking at, is a 3-minute candle, and that is what generated this very nice profit on the exit. We entered the trade for a debit of $4.43. We exited the trade at $13.88 credit. The difference between those two is a $945 profit on that risk of 443, and that is a 213% return on capital. So with these really volatile stocks, that's how to play these. Okay, just set up a straddle or strangle and be ready for a quick movement in the stock, but be sure that these are big movers. And that is your pro trader tip for the week. Everyone have a great trading week. We got lots of earnings coming up. Take care.